wintry morning here, and I'm delighted to be hosting another in a series of the BBW Paradigm Shift webinar featuring Sophie Trémolet and Dr. Patricia Calderon, whom I will introduce in a moment. These webinars are part of the BBW initiative, which, as many of you know, was founded at COP26 in Glasgow in 2021 by Frank van Gansbeek and James Vaccaro. It's an initiative that grew out of the 75th Bretton Woods anniversary, and it's an initiative now global in its reach, which proposes to create a multidisciplinary international task force to design transformative financial solutions and disruptive policy recommendations to address both structural finance fault lines as well as crisis challenges affecting the international monetary and society at large. This is further illuminated in work and research among the broad network of Beyond Bretton Woods leaders, among whom I am privileged to be, alongside Frank van Gansbeek here at Middlebury College. We have many financial system recommendations that are part of the BBW set of recommendations, and they're related to what we're going to hear about today, which is building financial resilience in the context of integrating water-related risks into central banks and regulatory frameworks. Our webinars, this being another in a series, are designed to provide a platform for leaders and emerging voices in global finance to propose transformative solutions addressing systematic challenges in the international financial architecture. We do this through in-depth interviews, and in doing so, explore innovative ideas to reshape global finance, emphasizing ecological sustainability and long-term resilience. Previous webinars have included Patrick Aki, the former Prime Minister of Cote d'Ivoire, Jito Kambua, a special advisor to the President of Zambia, and Pep Bardui, the director of the Bridgetown Initiative and special advisor on climate resilience to the Prime Minister of Barbados. Next week, Frank and I will be at a conference From Billions to Trillions at Duke University, yet another in a series of events where the BBW leaders and participants try to spread the good word about the need in this polycrisis to effect serious and systemic change. I am delighted to be introducing this webinar. As you can see, I'm a professor of economics and environmental studies at Middlebury, and in a moment I will introduce our two lead participants. Before I do, I'm going to give you a sense of the timing. As we begin, we'll hear the OECD's report summarized by Sophie Trémolet, and then Patricia, again, whom I'll introduce in a moment, will take about 10 minutes or so with some moderated Q&A. We will then invite all of you, and it's great to see so many people having joined us, to be involved in the Q&A, and you can do that with the Q&A question mark feature at the bottom of your Zoom bar. Not the chat feature, but the Q&A feature that you should be able to see at the bottom there. So we'll respond to your questions, and then we'll finish up with some reflections from Sophie and the closing. Our goal is to be done before the top of the hour, depending on where you are. And so we'll try to be as crisp as we can, and we thank you for that commitment as well. Now, our wonderful presenter, I'm going to start with my co-host, and then I'll be introducing our speaker. Dr. Patricia Calderon is a senior water advisor with 2 decades of experience across the private sector and civil society, and is currently a senior water advisor. She's the former CDP's global head of water, where she led the organization's water strategy as it scaled up water disclosure to a record number of companies and strengthened its involvement with financial institutions. She was the research lead in the collaboration with Planet Tracker of the investor-focused report High and Dry: How Water Issues Are Stranding Assets, CDP 2022, and lead author of Financial Institutions Are Valuing Water, CDP 2023. I have gotten to know Patricia as part of the BBW network, and it's thrilling to learn about her work and her leadership. Patricia holds a PhD in chemistry from the University of New South Wales in Australia. Our invited speaker is Sophie Trémolet, who is the water team leader at the OECD. That's within the Environmental Directorate there, where she advises OECD member countries and partners on water economics and finance, as well as water quality challenges. She joined the OECD from the Distinguished Nature Conservancy, a leading nature conservation organization, where she established the Europe Freshwater Program. She's previously worked as a senior economist in the World Bank's Global Water Practice and as a consultant on issues of financing, institutional and regulatory reforms, and private sector participation in the water sector for a broad range of clients. Sophie has earned her dual master's degree in economics and international development from Sciences Po and Columbia University. I am delighted to welcome you both. And we also have a student, Lillian Caldwell, who is helping us get through this, as well as our colleague, Johnny, who has helped us to get this webinar going. So we're thankful to them as well. With that, welcome, Sophie, and we look forward to your summary of your presentation. Thank you.
Thank you, John, for this very kind introduction. Good afternoon, good morning, good evening, everybody. So with that, I'd like to start the presentation, if you could move to the next slide, which will focus, as John mentioned, on a recently released report by my team at the OECD, the water team. The lead author was Lylah Davies, and this has been a team effort that looks at how water-related risks can significantly hurt economies and financial systems. So it's really framing the debate on water-related risks and looking at how these risks can be better embedded into financial supervisory frameworks. So if you move to the next slide, we can first of all take a look at what these water-related risks are. What we see is that water-related risks are multiple and rising. They're commonly associated with too much and too little water, polluted water, and disruption to freshwater ecosystems. And what we identified is that the planetary boundaries for multiple indicators related to freshwater have already been crossed. This means that the global water cycle, hydrological cycle, that is represented on this slide here, taken from a report from the Global Commission on the Economics of Water, published in 2024, that global hydrological cycle has been tilted out of balance. And that manifests itself in multiple ways. You're all too familiar with floods. Where I sit here in France, at the moment, we have very heavy flooding in the southwest of France with key rivers such as the Garonne or the Adour, which have overflown, with the impact of having large tracts of land and infrastructure underwater and emergency measures needed. This is, of course, reminiscent of similar floods in Valencia in 2024 or in Germany and Central Europe in 2021, which were the costliest to date. So this is increasingly a developed and developing country topic. These latter countries tend to bear the brunt of such events. For example, the 2022 floods in Pakistan had caused damage equivalent to 4% of Pakistan's GDP, and they were particularly damaging because they came on the heels of severe heat wave, previously something that was a 1 in a 1,000-year event. So drought risks are, of course, very significant as well and can impact agriculture, but also power production, as water is needed for power cooling or for enabling reservoirs to play their role when it's hydro electricity. It also impacts the smooth running of our infrastructure. For example, AI centers also need to be cooled, and that can have a very significant impact if there is one event of loss of water. And other activities such as navigation. You might recall in the summer of 2023, the Rhine or the Panama Canal having to stop operating because of too little water. Water pollution is a key risk, and it comes from either point source pollution or diffuse pollution from agriculture or from industrial uses. In a global study of 258 rivers, it was found that over a quarter of these rivers, for example, contain pharmaceutical pollutants over safe levels. We're seeing an increasing range, what we call emerging pollutants, being released in rivers and freshwater ecosystems with cocktail effects, which can be particularly damaging. So this is also linked and partly reflected in disruption to freshwater ecosystems with a significant impact on biodiversity. It's important to bear in mind that aquatic freshwater biodiversity is the ecosystem that has most been disrupted in the last decades, with a fall in freshwater biodiversity of 84% since 1970, the highest decline across all ecosystems. So these risks can have significant impacts on economic sectors, regardless of their direct level of water intensity, because there's a range of impacts and dependencies across their value chain. This can cause capital destruction, value chain disruptions, and price volatility, and thereby can trigger relocation or adjustment of some of these activities. This can have micro and macroeconomic implications, which can lead to systems risks. Which is why we come to the point of central banks. Why should central banks be looking at water-related risks? So if you go to the next slide, we found that there has been an increasing consideration by central banks of climate risks at first, which is what the Network for Greening the Financial System initiated, for example, and then subsequently of nature risks. And when we look at nature risks, many of these risks are in fact related to water. So we're seeing some banks, particularly in the European Union, taking water-related risks more and more seriously. There has been some guidance issued by the European Central Bank, for example, to look into water-related risks. And that follows in the footstep of the Bank of England or the Dutch Central Bank, which have started developing sector-specific stress test tools, built internal teams that look at these risks, and embedding climate scenarios into their supervisory practice. With respect to water, things are still a little bit in their infancy, even though there are some banks that have carried out some evaluation of these risks. For example, in Morocco, a stress test showed that over a third of bank loan portfolios could be exposed to drought risk. This is mostly linked to agriculture, food processing, and tourism sectors, but also impacting households in vulnerable areas. Another stress test conducted in the Netherlands found that extreme flood events could impair financial stability, particularly if densely populated regions in the Netherlands were hit by an extreme events. So there is work as well from the Hungarian Central Bank that was conducted with the OECD and other case studies under the NGFS. Besides that, when we look at the overall macroeconomic impact, there has been a series of studies, including from the Global Commission on the Economics of Water, which point to potential GDP loss of 7 to 9% associated with water-related risks, which is the highest amongst other ecosystems-related risks. These risks could be even higher for developing countries, looking at up to 15% of GDP loss by 2050. However, water-related risks remain difficult to model because many stress struggle with accuracy, granularity, and comparability of data. So they tend to be very limited in scope, very focused, and miss some of these systemic issues. However, our view is that waiting for perfect information is not an option, because meanwhile, these water-related risks keep being compounded and increasing in scale. So if you go to the next slide, we are seeing that financial supervision authorities, including central banks, can actually play a key role. And this is what we are seeing with these European central banks taking the lead in this area. They can integrate these water-related risks into three main areas. First of all, they can include it into banking oversight and risk frameworks through the Basel III framework, for example, which remains central to global prudential regulation, or through Pillar 2 of this Basel framework. Supervisors can expect banks to identify, assess, and manage material risks, including water-related risks. So this is what we've seen the Hungary Central Bank doing by taking an innovative approach to apply targeted capital relief for verified green lending, as they have found evidence of lower credit risk. Second, the monetary policy frameworks can adapt to environmental shocks. The central banks can adjust their operational tools to reflect these environmental banks. For example, by taking collateral frameworks which reflect water-related risks. And then third, one important thing to bear in mind is that central banks themselves are holder of very large portfolios. So in the way they allocate their portfolios, they can reflect different approaches to water-related risks. So we will give more example of that later. So next, it's important to see that in the next slide that the financial authorities should not act in isolation, because they operate in a broader policy ecosystem. Sorry, if you could move to the next slide, please. So ultimately, then central banks are not the ones that are going to take the decisions that have an impact on water-related risks. This is the real economy policy player that will do so. But through investment regulations, such as corporate disclosure mandates, sustainable finance taxonomies, due diligence, etc., it is possible to trigger change. So the financial institutions can therefore gather the data and compare these in order to tackle environmental risks. And finally, we think that collaborative governance can bridge the financial and environmental agenda. It requires coordination across sectors, because a drought can have an impact on farm loans, and therefore trigger a series of financial collapse and financial bankruptcy. So it's important to look at the range of actors that can intervene if you want to address those risks. So this is what we try to bring together in the report. If you go to the next slide, that was released in October of last year, and you have a QR code here that summarizes the main recommendations stemming out of the report. First of all, it starts with identifying those risks and naming and monitoring those risks. So central banks can do better at identifying what these water-related risks can have as an impact, how material they can be on financial and price stability, so that they can elevate those issues within broader government agendas. Second, they can set clear supervisory expectations for managing water-related risks, so as to enable financial institutions to address them proactively in their choices of who they lend money to, for example. Third, it's important that the financial policies and real economy policies be mutually reinforcing so as to ensure freshwater ecosystem protection. So there's a need for collaboration and exchanges between those set of actors. Fourth, we can see the need for embedding water into financial regulation and market standards with clear rules to support supervision. And last, as mentioned earlier, collaboration across stakeholders will be key, both at national level, but also at international level. So this is an emerging agenda. We found that there are some central banks that are further ahead than others, which is why we have proposed on the back of this report and on the back of consultations we made to prepare the report, to hold what we call the Roundtable on Financing Water, which brings together water and financial specialists. So the one that we're organizing in May 2026 in Madrid, and if you go to the next slide, we'll have a particular focus on bringing central banks and financial supervisors, but also other types of financial actors such as asset holders, credit rating agencies, insurance companies, and in order to discuss these issues directly with water stakeholders, including policymakers, but also water companies and water agencies. So this is the objective of this roundtable. And what we'd like to do is to enhance understanding and action on what can be done to address water-related risk in financial systems, but also to foster collaboration between partners to develop new type of analysis and, most importantly, define ambitions and recommendations at national and international levels. So I hope you can join us. There's a link on our website at the OECD to register. You can register in person or online, and that promises to be a very fruitful event. Thank you very much. And back to Patricia. Thank you.
Thank you very much for your presentation, Sophie. Thank you, Professor Jon Isham, for the framing of our event and the really kind introductions. In terms of your presentation, Sophie, you have helped us understand how water-related risks are actually having significant impacts to our economic and financial systems, which shocks causing capital destruction, value chain disruption, and price volatilities. And with financial risk showing up as credit losses, underwriting losses, and market volatility. And that these risks can propagate, undermining financial stability. You have clearly emphasized how central banks cannot ignore climate and nature risks in their mandate to ensure price and financial stability. You indicated to us that some of them are already undertaking efforts to strengthen macroprudential measures, integrating nature, and importantly, including water. But you also pointed to us that they are being challenged with a lack of analytical capacity and data availability. And critically, you articulated that central banks and financial regulators already possess levers within their mandates that can help strengthen financial resilience. So I now move into the moderated Q&A for about 10 minutes, and I'd like to explore some of these further. So if we can remove the slide, thank you. My first question, could you please share with us an example of how central banks have used their levers within their mandate to reflect or manage water-related risks?
Thanks, Patricia. Thank you very much. So I think what we find is that several central banks start with research, with their research departments. So they first look at how they can measure water-related risk better. And the first step is often they do this at a quite micro level. So we've seen, for example, Bank of Spain, the Central Bank of Spain, which is one of our partners for this roundtable, has done a very interesting study looking at how the pollution in Mar Menor, which is in the south of Spain, which is due to agricultural pollution, feeding into an internal sea, which then suffers from eutrophication and degradation of freshwater ecosystems, death of fish, and an impact on the local economy. So they're looking at how this has impacted real estate prices in the immediate vicinity of the Mar Menor. So that's how they can first grasp these impacts, because I think central banks are not necessarily familiar with water-related risks. So they tend to start small, but then they have an approach that takes a more macro view. So that's what we mentioned for the Dutch National Bank, which has looked at how this could, a major flood event could have an impact at a regional level on the economy at large. So not just a single sector, not just a single risk, but looking at how this can impact. And then, of course, then they need to move from assessment of risks to doing something about it. So the example that is interesting is that of the Bank of England, which integrated flood risk into its mortgage collateral framework. So they update valuations, what they apply what is called haircuts in order to account for water-related hazards. So that means that gives less space for lending to the banks that want to land in these areas, and that gives a clear signal that there should be less lending for areas where there are water-related risks. I mentioned as well in the presentation that they are major asset owners, so they themselves can lead by example by applying TNFD framework, for example, across their portfolio, using tools such as Encore or the WWF biodiversity risk filter to evaluate how their own portfolios are impacted by water-related risks. That's what the Dutch National Bank has done. And then ultimately reallocate their assets, because one thing is to assess the exposure to water-related risks, but then that needs to be followed by implementation with asset reallocation in terms of reducing this exposure to water-related risk and giving signal to the economy that to disinvest potentially in areas which are most at risk.
Thank you so much for that comprehensive answer. And it's really interesting how you go from examples where that is starting small, but then they also go the macro regional level. And I'm very keen to hear, I was also very interested to hear that the Bank of England, I live in London, are already doing these assessments, particularly in flood-prone areas. So thank you so much for that. My second question, as you highlighted in your presentation and is very clearly articulated in the report, is that there is a need for deeper collaboration across institutions and to, as you said, move from risk identification to system resilience. And I'd like to know from yourselves, what do you see as the distinctive roles of financial authorities, financial regulators, and policymakers in strengthening these risk assessment methodologies, and importantly, on ensuring that water-related risks are effectively managed across the financial system?
Mm-hmm. So I think first we need to break the silos between these two communities, because what is interesting, and my background is more in water management rather than central banking. The author of the report has looked much more into the central banking rules. But importantly, the central banks have not waited for water experts to tell them to look at water risks. They've themselves, listening to the news, hearing, seeing what is happening, looking at climate scenarios, have been taking the measure of these water-related risks. In some cases, they're more focused on floods and droughts, in others on pollution. But the Bank of Spain, for example, is exposed to all of these risks in the Spanish economy because the Spanish economy is very dependent on agriculture, on tourism. They also use a lot of hydroelectricity. So they're also hosting a lot of AI centers going forward. There's more and more being built. So they're deeply exposed to these risks, yet this is not reflected in macroeconomic models. So they have been sensitized to this, and out of their duty to maintain financial stability, they are looking at these risks. However, they are not necessarily experts. So obviously the water-related people, water management people, policymakers, scientists, etc., need to get more involved with these central banks initiating the work. And vice versa, I think it's important for water people to better understand what central banks can do for them, because we've been banging the drum of looking to increase water investments for decades now. Water is a chronically underfunded sector. We've heard a lot about the backlog in terms of achieving SDG 6, particularly in terms of access in developing countries, but there are many other water investment needs for maintaining and rehabilitating aging infrastructure, for building and strengthening flood defense, for building reservoirs, including natural reservoirs through nature-based solutions, retaining greater water into the landscape, looking at building sponge cities, etc. And all of these techniques and investments need to be made clearer to the financial community so that they know where to direct financing. And so that's where we think there's really a need for convening, for translation of the vocabulary of both of these communities so that they can work better together and in a more integrated manner.
Thank you, Sophie. And what you clearly articulated is there's a need of that collective action, moving out of the silos, the water people really familiarizing with what financial regulators and these authorities at the macro level, and also the macro authorities are not waiting. They are rolling their sleeves and they are carrying out the analysis and the tests that need to take place. And now towards my final question, what do you see the role of the OECD in this ecosystem? And looking ahead, what are your hopes in the short term, in the medium term, and in the long term? And in particular, we know that we have a 2026 UN Water Conference in December. And yeah, we'd like to know what would you hope to see emerging from that?
Yeah, maybe I'll start with that because I don't know who is on the line, whether it's more people from the water community or financial community, but obviously for the water community, the UN Water Conference that will take place in Abu Dhabi in December 2026 is a big milestone. We already had one water conference, which was the first in more than 40 years in 2023. That was the first one. There was still a lot to be explored in terms of how this can function, because obviously we don't have an international treaty as we have one for climate or for the Rio Conventions for climate or the Global Biodiversity Framework for biodiversity. So we don't have this big framework, but what we can try and do is nudge the debate towards, as I said, better leveraging of financial institutions. But for that, we need to become smarter as the water sector in terms of explaining what these water-related risks are and what can be done. So this is the role that we're looking to play as OECD. We had, a workshop that led to the publication of this report in which we brought together all the different central banks that we identified were already doing work on this. And that alone was very impactful because that means they could learn from peers and exchange views about how to model water risk, what tools they had been using, what challenges they had been facing. And then, of course, the question about how to turn that into financial supervision and therefore trigger more investments in water. Or less investment in water disruptive or water sort of negative activities as well. So we hoping that the roundtable will be a key milestone in this as we bring central banks together, but also that will be an opportunity, and we will be publishing a a policy paper on the back of this roundtable to identify roadmaps both at national level and at international level. So at national level, in the report, we formulated a number of recommendations about how to foster this dialogue, this collaboration between financial authorities and water sectors. We will be doing a small test of these recommendations in Spain itself on the back of a report published by WWF that looked at how financial institutions are currently taking account of water-related risks. So we'll use the case of Spain, if you want, to test this approach, hoping to inspire many other countries, because cases like Brazil, Mexico, Egypt, Morocco, they're all looking towards these experiences in terms of how to do it better at national level. And then we're hoping to elevate the level of ambition at international level, which could take many forms. It could be a declaration by central banks that they could make at the UN Water Conference in terms of how to strengthen the monitoring of water-related risk and incorporating that into their financial supervisory frameworks. This is the type of declaration, or this could be of the financial sector more at large. This is the type of declaration we saw in COP28, for example, on climate. So we're hoping to emulate and stimulate something like that at the UN Water Conference. It's too early, of course, to say which form it will take. But in the UN Water Conference, there's several themes, interactive dialogues under which this type of declaration can appear, such as water for prosperity, investments for water. So there's a clear recognition that these aspects need to be taken forward. So that's one expectation for the medium term, and of course, broader take up of these approaches in the longer term based on such declarations.
Thank you, Sophie. Thank you for that. And it's really interesting how you're showing us that there are already some case studies, there are pilots. So it'd be really interesting to see that policy roadmap after the Financing Water Conference from the example of Spain. And I really love to see that declarations at UN Water high level from these macro actors. So we really have a very insightful with report and answers to your questions from your side. And this has shown us that how water risks are deeply interconnected to financial systems and the progress that has been made. And now we're going to be turning to our Q&A from the audience. We have one question here from Frank from BBW Beyond Bretton Woods. How could wetlands, floods, and water buffers, droughts be introduced into the monetary policy to maintain price stability? Is there a potential for dynamic pricing for water to be introduced on sectors such as agriculture and for data centers?
Yeah, so maybe I'll start with that second question. I mean, in terms of dynamic pricing, water is still behind, I would say, energy, for example, for in terms of pricing, especially for agriculture, which accounts for 70% of water usage globally, but is still very much behind in the sense that most agricultural water pricing is based on abstraction charges, which are usually set based on very rough estimates and tend to be much below the actual cost to the ecosystems of withdrawing these waters. Of course, in countries that have faced drought for many more years or regions such as Australia or the west of the United States, we've had water markets in place for some time. I would say the most advanced is in the Murray-Darling basin, where you have dynamic pricing for water abstraction rights that have been introduced. I think this is still quite underdeveloped because there is a protection, if you want, of agricultural water by many politicians, and this has been identified as a sensitive topic to address. But the more we are seeing drought risk coming forward, the more we will need to move towards that. And this is where, I mean, one of the things I didn't mention earlier is that if such reforms are argued for in a central bank's report, this can have a very stronger impact with economy ministry rather than just coming from the water sector. So, you know, many water specialists have been saying this for years, but obviously we have very strong economic forces that we are up against, and therefore it's important to use the central banks as allies in those discussions. So in terms of wetlands and water, I mean, how to introduce them into monetary policy, this is really through effectively the collateral requirements, as I mentioned, which could be one way of doing this, i.e. to apply haircuts for collateral in areas where that are particularly prone to floods and droughts. And if they are investments in reducing flood risk or reducing drought risk, because we know as water sector how to do that. It's not a perfect science, and it's not completely secure, because we are, you know, we working with nature here. But still, this can be the risk of exposure can be reduced. So effectively, shifting investments towards these activities can be a key way of doing this. Then there's a question about the role of corporate businesses. I mean, this is something that we will discuss as well in the roundtable, incidentally, because they can themselves assess their own water-related risks. They have to effectively disclose their water-related risk, and it's important that they become more aware of their own exposure, so that they can reallocate activities, but also look into their value chains, because a lot of the water they consume is actually virtual water imported from abroad across their value chain. So being much more aware of what virtual water content they are incorporating in their value chain is critical, and hopefully help them make choices about where to procure their goods from, or invest locally in a, you know, corporate social responsibility approach into strengthening the resilience of the places where they import water from. And then there's a question from David Short-Jones. What role do you see for sustainable finance taxonomies? I mean, I think this is critical, because it can drive investments to the activities that are more sustainable. One of the things that we are arguing in favor of as the OECD is to define a water sustainable finance taxonomy, if you want, something that would be much more clear, and also go beyond the regional ones, because we have the Europe Sustainable Finance Taxonomy, but it's across the board, and but on the other hand, it's for one region. And for water, often what we find is that there's a lack of understanding by financial institutions of what constitutes a water investment, what constitutes a sustainable water investment, and therefore how they can not only allocate their capital to these activities, but also track what they're doing. It's very difficult, and this is something that we're trying to do, is to track how much financial institutions or even public investors, governments, are investing in water. And the problem is that there's no single typology of what constitutes a water investment. Therefore, the data on water investment is very poor, especially when compared to data for energy or for biodiversity, which is also a complicated sector, but for which, on the back of the global biodiversity framework, there are much better sort of frameworks for tracking investments in those areas. So definitely we think that a taxonomy or a typology of investment would help bring clarity to all of this. Can go for the water cancer problem. Yeah, there's a question from Raphael here. I agree that this would be a very very positive advance.
Perhaps we read the question. Yeah.
Oh, sorry. So it's how can key stakeholders, regulators, standard setters, financial institutions, and corporates advance a water accounting framework analogous to Scope 3 GHG reporting so that companies disclose full value chain water exposure rather than only direct operational use, particularly in high-risk sectors such as agri-food? But how can this support more accurate pricing of water scarcity and its financial materiality? So I think there's multiple questions in there, but definitely having a water accounting framework across the value chain would help, because you're correct to say that the direct operational use is only a very small portion. So at the level of the facility, etc., it's a small portion of their total water use, as I mentioned earlier. So we would need to be able to track this better, and there are initiatives such as tracking water footprints, which have been doing this for some time. Ourselves as the OECD will be looking at the level of virtual water, but more from a macro perspective rather than a corporate perspective. But this is, I'm not seeing a sort of single attempt at doing this beyond sort of what is led by NGOs, which is very, very valuable, but I'm not seeing a sort of single system for doing this. I think there's still a lot of work that can be done.
And I think we have probably time for one final question from Annabelle Nelson. Given the location and specificity of water, which may make attribution of harm easier, do you anticipate an increase in water-related litigation?
I mean, this is a little bit more out of my comfort zone, but I think which may make attribution of harm easier. I mean, it is attribution of harm related to point source pollution, for example, but a lot of, because hydrological systems are interconnected, sometimes you would have harm that is further down, further downstream, which is difficult to trace. And also what I mentioned in the first slide is that what we're finding is that the global hydrological cycle is much more global than initially thought. So if you cut forest in the basin of the Congo, for example, that what is called an evapotranspiration basin, then that can have an impact many kilometers away in terms of rainfalls and reduction in rainfalls because of loss of forest cover. So what we're finding is the harm is actually not as local as originally thought. And when we're looking at local impact, this is very difficult to attribute, because the local size is much broader than the immediate vicinity, I would say. But that doesn't mean that there cannot be litigation on this basis. I'm not sure that this is the only, that this would be the most constructive way of taking things forward, because there are multiple water users and everything tends to be fought in an integrated water resource management framework. So it would be a little bit difficult to pinpoint blame, except in the case of very localized pollution incidents, for example, where this has been applied for many, many years. But I think the point is, we should look at collective responsibility and really find for collective solutions as well. There's a place for specific litigation, but that should not be the only way forward in my mind.
Great, thank you. And I think with that we're gonna end the Q&A. Thank you very much to our audience. They're really great questions, and to Sophie for really your wealth of knowledge of tackling them. I found that these push for central banks to really become our allies in the water sector, and other things that people have been working over decades to now have the opportunity to cross-pollinate with central banks and really elevate it to their ministers of finance. Collateral frameworks, that sounds quite transformational. The importance of including virtual water in supply chains so that companies, financial institutions ensure that there is supply chain resilience. And also, yeah, that your work sounds quite interesting on virtual water on a macro level perspective. So I'll be looking forward towards that. And with that, yeah, overall, thank you so much. You have demonstrated that water-related risks are no longer merely environmental externalities. You have proven that they are emerging drivers of macroeconomic and financial stability. Thank you. Thank you so much for your time from my side, and from the audience, and from people here at Millbury College. We have students that have supported this event throughout, and they are Lillian Cadwell and Angela Easy, so I'd like to mention them. And if you would like to, please share your closing remarks, and then we'll pass to Jon for the closing of our session.
Yeah, thank you very much, Patricia, for your great moderation. And I think thanks to the audience, because these were really good, solid questions, which invite food for thoughts. So I'm invite you to reach out if you want by email, or to register for a roundtable. And this is emerging work, as I said. I think we all in new territories. There's been advances in Europe, but we're looking to really make this a global movement, including through collaborating with the Network for Greening the Financial System, which is a network of 170 central banks working on climate, nature, and now water. So the more we can, build this into a real movement, the better. So looking forward to engaging with many of you going forward. Thank you.
Thank you, Sophie. And Jon, now may I invite you to provide us with our closing message.
Well, thank you, Patricia, and thank you, Sophie. I think this BBW webinar makes it clear what is it like to be in the presence of an expert, or two, I should say. And Sophie, your expertise comes through loud and clear, and we're really grateful that you could share your good work with so many people this morning, or this afternoon, or even this evening, depending on where you are. I appreciate your use of the word movement. That's what, in the end, all of this is about, dealing with the poly crisis, dealing with this beyond Bretton Woods framework for finance and globalization and the turmoil that the world faces, summarized as a poly crisis, even as we do celebrate ongoing good news around poverty alleviation, and other long-term trends. But we're in a challenging time, and BBW is meant to step into that, led by so many whose work you can find on our beyondbrettonwoods.org website. So it's wonderful to see so many people with us today. It's great that this is recorded so we can share it around. And I know that you'll see future announcements of future webinars of this caliber, no doubt. I'm honored to be here. Patricia, thank you again. And Sophie, thank you for your expertise. And as you say, thanks to Angela and Lillian and Johnny for making this webinar happen. Good luck to everybody in your good work, and we look forward to seeing you as soon as possible at the next webinar, or in whatever fora work in terms of trying to build out this ongoing movement for social change. Thank you all so much.
Thank you.
Thank you. Thank you, everyone.